Hi guys, this is Manoj from Market Ideas for Profit, and here I'm bringing to you a video where I am trying to explain how I use the volume profile and especially the virgin point of control to show me where the market can head and what direction the market can take and what are the demand zones and the supply zones that the market is going to approach in the coming period. So to give you a little explanation of the volume profile to start the video. So if we see on this video, if you can see my screen, these are volume profiles for each session, which is in the Indian market from 9:15 to 3:30. So the day is divided by these grid lines, and this is the volume profile for each day. And what you see here is the accumulation of volume through the day. You're displayed on the sidebars. So this is the point where the maximum volume took place on that particular day. So this is the 26th of December, and 42116 was the point of control for this day. So subsequently on the 27th, this was the volume profile for that particular day, and the point of control was at 42532. And then similarly on the 28th, this was the point of control, which was at 42883, and so on. So we are trying to see how the volume was exhibited on the profile for that particular day, and the maximum point where the volume was created is where the point of control is drawn by the software, which is called the point of control. Now if you see, the point of control gets extended to the right and gets blocked the next time it is visited. So say for these particular days, if you see that these are the only point of controls that have not been visited, these four are the only point of control points which have not been visited by the price action. So all the previous price action, all the previous point of controls have been visited, and that's the reason we don't see them extending to the rightmost level. So when these point of controls are still not visited on the chart, on the price points, are called the virgin point of controls, and which we, for our understanding, will call the vPoC. So vPoC are those points on the chart where accumulation of volume was seen on a particular day, which was the point of control for that particular day's action, but the price has not come back to visit that area in the subsequent days. So that's the virgin point of control that we are referring to. Now, how would I use this information to understand the bias of the market and try and predict what can happen? So whatever point of controls are at the lower end from the current point of control, which is this, the last point of control, I would consider them as demand levels or supports, and whatever point of controls are on the top and to the left, those I will consider as resistances or supply zones. And the nature of the price is that it is drawn towards these virgin point of controls. So these act as magnets. That is what is the inference from the study of the point of controls. And as usual, if you know that these are nothing but supports and resistances and demand and supplies. So as we know, the price is attracted to areas where there have been imbalances and where previous major activity has been reported. So this is the basis of the plan that I use to understand what are the levels of interest in the market, and in an intraday period or given in a context for the next few days, what can happen. So we will take the study down. We will take this study and take a snapshot of a previous 5 weeks of data starting the middle of November to understand how we could have used this information to understand how the market would flow. So I will take you to another tab where I have opened the action from somewhere in the middle of November, somewhere in the beginning of November to the close of the year. This is a 30-minute chart, and I'm using the GoCharting platform to give me this information. So these are volume profiles marked on a daily basis. I can give you this the access to these settings by sharing the link of this setup, and you can just use the URL and on the GoCharting tool, and you will be able to copy the setup and save the template as you want to do it. So now let's try and use the screen replay tool to give you an assessment as to how I would have assessed the market, how it was going in the period that we see here, and how we could have traded it. So we will use the screen replay tool that is available on the GoCharting tool. So I will click on the bar replay function, and I will drag my cursor to say the 11th of November, and we could start from the beginning of the day, and let's see how the market progressed, and I will provide my commentary as we see what's happening. So this is how it goes, and this is where we are on this is the 10:45 candle on the 10th of November, and we will proceed with to see what the action was happening on that day and how it proceeded till the end of December, which is what we are currently at. So I have initiated the bar replay, and if you see that at that point of time there were 2 pointer controls that were not tagged, and the price will tend to go towards the point of control that has not been tagged. So here what we saw is that there was a gap up, and the point of control was not visited, so it will still remain as a virgin point of control. We came close to the point of control but did not tag it as yet, and this is the day's point of control, and now we see that it gets tagged. We move on to the next day, and we're seeing that the market is slightly sideways, and this point of control is still holding. The point of control is shifted higher, and this point of control, which was a virgin point of control at one point of time, was revisited, and that's how the point of control did not then extend to the right, and it converted from a virgin point of control to something that was already used. As we move up, we are testing levels, the old previous pointer controls, and we are moving higher. This is a typical phenomena in every market. When the rally is strong, the rally will try and test all previous support levels and keep on moving higher. That shows that the rally is strong. If you see that we again revisited this point of control here, and on the same line it acted as a support, though it was already tested once, but like a demand that still has some unfilled orders, the area was having a few more orders, and it acted as a support, and the prices moved higher. So there's another level of demand that has been created, and there surely are some unfilled orders here at the moment, it seems, and we have moved higher. The imbalance has been created and we have moved higher. So this area again has remained untested, and we have moved higher. So the rally is strong and the imbalance is strong, and the bears are having a bad time, and the bulls are pulling the market away, and this time without testing these levels. That's the important part. So that shows the strength of the bulls, that even they're going higher even before they've tested previous demand levels. So there is some huge imbalance in somebody who's really feeling that the market is not in its right price area. So we have a number of pointer controls here which are lying virgin at this point of time, and that's a bad sign for the market, because it's not tested previous levels of demand and kept on going higher. So this looks like an extended rally to me, and from here on, seeing that these pointer controls have not been tested, I will be very skeptical on going long any further, because the market is my stop losses would be deep as I go along, and I am expecting that the market rally may go down to test these levels, as the inference that I have at this point of time, and I will be very cautious on my longs after I see that a lot of pointer controls are still lying virgin and untested as we go higher. So if you see, that the rally is beginning to tire here, and the kind of move that we saw from here to here or from here to here is now beginning to move sideways. And finally we have one point of control which is on the higher side, which remains untested. So as we proceed here, we find that it got tested again, but we definitely are seeing some sideways movement here now, and this will make me uneasy to go for any more longs as I see this action. We are in a sideways movement here, so there's something happening in the market. Either we are building for the top side or we are going to aim lower. This is some kind of sideways market. So finally we see some action, and the market still remains sideways, but we now have one point of control which remains untested. We move higher with our point of controls, and we again see a small rally after this consolidation. But yes, we are leaving a lot of point of controls, and we see that the gap between the current point of convergent point of controls is gaining, and that's not healthy for the market, because sooner or later the market will come to test its support. Is the way the market creeps higher. It will not keep on creeping higher without testing its previous support. That's the normal nature of the market. As we see that we have one more point of control, remaining virgin at 43,765, and now we are beginning to really extend ourselves on the rally. But we've seen a good rally after this brief consolidation, but yes, we have left a lot of point of controls untested on the bottom side. Now this is the 15th of December, and now that see that the rally is beginning to fizzle, and as it fizzles, it is going down to test all the point of controls that have remained unvisited in this area. And this point of control here is now beginning to act as the resistance. After having a fall, we are going a little sideways again here, and if you see that we aren't progressing as strongly as we were in the previous rally, and we keep on testing the point of controls that are made on the higher end of the market, and the market is beginning to lose steam, and there are 2 point of controls that it took away in a very sharp downward move. So now we are down almost 1,500 points from the top, and we are now tagging all the virgin point of controls that had remained untested for well over a month. The market is now going to take support somewhere at the last point of control that was not visited, is where the market took control, and it took this sharp downturn to test all the virgin point of controls that left untouched over that period of 1 month. And if you see, right from there we began to rally back, and the effort of the market was to take back all those untested areas and tag higher again. So here we are on the 29th of December, and this action is again telling us that we have traveled all the way down to test all the untested areas that we have had. And was a surprising rally. We were very afraid that what was the meaning of this downward push, but at the end it was a technical move to test all the untested levels that remained unvisited in the rally, in the sharp rally that we had seen. And this was just a shakeout of all the weak hands and a test of all those areas which remained untested during that rally in the last month. So this is where our bar replay ends. And now if we were to assess as to what is the new playing area that we have, we see that there are 3 pointer controls that remain untested, 2 up to the bottom and 1 to the top. And my next view would be to expect the market to move. If the market moves, these are the levels that have been identified, and if the rally happens, we would tag 44,000, and if we move lower, there's a huge chance that we touch 42,600 and 42,200 in the coming days. So these are the inferences that I get. And if we see at a long picture extending for well over 2 months, we will see that most of the pointer controls that were visited have now been tested, and the really untested level that remains is the 40,700 on the bottom. If you were to assess the period starting from here we are from the months of October, so there are some point of controls that remain untested as we go higher. And yes, if the market were to drop, these levels would get tested at some point of time. But this gives us a fair idea of the levels that the price would get attracted to in the shorter term. And these are the 2 levels that are the first ones that would get tagged on this side. And if we keep on creeping higher and these 2 levels remain untested, there is a possibility that in time to come these levels will be revisited. So this can give you an understanding of how the market would proceed further, and in the shorter time frame we could use this information as relevant information to give us a directional bias as to where, if the prices are going, where should be a target that can be placed for our longs, and where could be a target that we can place for our shorts, because the area within these pointer controls is a fluid area where there would be a lack of resistance and support, and the price would tend to travel sharply from a pointer control to the next areas that still remain untested. I hope this video gives you an idea as to how you can use the virgin pointer control to assess the levels that can be visited by the market in the shorter time, and how an extended period of rally can see a sharp reaction, and where the sharp reaction can find its bottom. So it's like you're having a number of demand levels on the way down, but you would want to know which demand level will be the one where the market reversal will happen. And if that demand level that you see by using the candlestick chart patterns coincides with the virgin point of control, that could be the area where you could find probable levels of reversal when you're going on when you are looking for a reversal. I hope this video gives you an explanation of how the virgin point of control can be used to find the trend in the market, and where once it reverses, where we could find support as it reverses down and tries to take a technical support. So guys, if you like this video and the idea that I presented of how to use the virgin point of control on the volume profile, do give me a like and subscribe to the channel, as I keep on bringing such information related videos around the volume profile. And if you wish to learn more about the volume profile, I'll attach a link to a course that I host, and you could access that course and get an introduction to the volume profile and how it is used. This is just one tool that you need to use in the market, and by my experience, once you use this tool with vPoC in the day, your intraday trading can improve by leaps and bounds. Just these 2 tools, the volume profile, the vPoC, and the order flow, is all that you need to successfully trade any liquid market in any asset that you could be looking at. So give me a like if you like the video. Do subscribe as I requested you before, and I look forward to seeing you in the next video. In the meanwhile, as I said before, I am giving you access to a link on a course which is something that you can access and learn more about the volume profile. And I am open to engagement on a one-to-one level. You can request me for a one-to-one session, and I could introduce you to the volume profile tool one-on-one in a 15-minute session, and we could take it up from there. Looking forward to engaging with you. And also I have a link attached in the description on the way you can subscribe to the GoCharting tool. You would get instant discounts on your subscription plans through the link that I propose, that I have enclosed here with. And yeah, looking forward to engaging with you more often with this subject, which is close to my heart, the volume profile. Thank you.